Let's begin with a special inside story on Paytm Payments Bank. We told you first over here on ET Now about the reasons that led to the regulatory action against the lender. Now we have more information here on ET Now for you. We have further learned that the doubts of the regulator are not just limited to the payments bank, but the RBI has also found improper dealings with the bank's parent company, which is 197 Communications. My colleague Ankur Mishra knows more about this. He's been speaking to his sources and he's at the wall to fill us in. Ankur, if you can tell us about the new reasons that are emerging, why we've seen regulatory action against Paytm Payments Bank by the RBI.
There has been improper dealings with parent firms. So the problems are not just limited to Paytm Payments Bank, but dealings with parent firms such as 197 Communications or OCL, which is the listed firm. Now, what are the problems? So there is non-maintenance of arm's length with the parent company. There is flouting of licensing norms. There is also banks' financial and non-financial transactions are mingled, and that is with the parent firm. Apart from that, there are two other problems. One is related to the disclosure on the assessment of what are the payables by 197 Communication to the payments bank, and that has not been disclosed in the financial statement. Apart from that, banks' dependence on IT infrastructure of the parent firm is too much, and there is no segregation which has been found by the regulator. Now, what are the other violations? There are also many transactions which is done through parent entity firms, and that has raised serious questions on data privacy. Apart from that, KYC norms flouting was also found. The PAN was not linked to just 100 companies, but it was also found in some instances that it was linked to thousands of accounts. Apart from that, if you talk about the transactions, it was in crores. Remember, as per RBI norms, it is supposed to be within the limit of 1 lakh when these violations were found. And there were also submissions of false compliance by the Paytm Payments Bank, and hence an action was taken by the regulator. But now the bigger question is, will there be cancellation of license of Paytm Payments Bank? Sources have informed us, yes, after February 29, Reserve Bank of India may consider cancellation of license because there was flouting of norms by the company. And also, if we see the order, there is no time which is given to the company. Unlike previous orders, that company can come back and resolve the issues. Apart from that, we also reached out to company for the reaction. The company has told us that Reserve Bank of India has taken an action based on the supervisory assessment, and the company is not involved in any anti-money laundering or KYC norms flouting.
All right, so that's the word that came in from Paytm's management. Thanks very much, Ankur, for filling us in. But now that Paytm's parent company, 197 Communications, and of course Paytm Payments Bank itself are under fire, the question is, what happens to the connected investments that we have and the SIPs? Now, let's find out from my colleague Kavita. Kavita tracks the personal finance universe very closely, and she's joining us after speaking to the experts about this. So, Kavita, what kind of impact can we expect on our investment portfolios after the RBI has cracked down very hard on Paytm Payments Bank?
All right, let's talk about SIP going through Paytm platforms. Now, RBI instructions are for Paytm Payment Bank. Now, we have Paytm UPI, we have Paytm Money app as well. Now, what you need to understand as an SIP investor is these two platforms, Paytm UPI and Paytm Money app, work as intermediaries, as in there is a bank account which is linked with these particular accounts of yours. So, you give an instruction for an SIP and the money gets into an SIP, or the money goes from the bank that is linked with Paytm UPI and Paytm Money app. Now, as long as the bank is not Paytm Payment Bank, your SIPs are fine, which means your SIP will keep going even after 29th Feb, because nothing has come or nothing has been instructed for Paytm UPI and Paytm Money app, which act as an intermediary right now, where some other bank is linked for all your transactions. But if in Paytm UPI and Paytm Money app, from where your SIP is going, the bank account that is linked is Paytm Payment Bank, then you have to change the mandate and maybe put a mandate of some other bank so that the money goes without any problem from that particular bank account. Because if your mandate is to Paytm Payment Bank, then after 29th February, your SIPs will not go. So just make sure and change the mandate if in case your money for the SIP goes from Paytm Payment Bank.
That's an important piece of information. You need to kind of ensure that your mandate is changed in case your SIPs are going through Paytm. But we'll see exactly what happens next. Of course, the pressure is going to persist on that counter. You're seeing it on your screens right now as well. We've been caught in lower circuit. So now what is the outlook for the stock? Here's the editor's take.
That's my take. Do not, if you are an investor in Paytm, do not try to catch a falling knife, which is don't try to buy the stock in this decline. Because when a business comes under regulatory scrutiny, the core of the business, which is the franchise value of the business, surely will come under stress. One is better off buying or revisiting Paytm when there is clarity in terms of where the earnings are moving and what are they doing in terms of repairing the regulatory concerns, which is it is better to buy Paytm on an uptrend rather than trying to average this part. What has been the erosion in Paytm's market cap? That is important for us to point out. It's a coincidence, but the market cap of Paytm has gone down by 20,000 crore in 5 days, but Jio's market cap has gone up by 28,000 crore. Just a coincidence, but that's how markets think, you know, one man's poison is other man's food or vice versa. That's how markets always move. It cannot be really enumerated in a mood in terms of the shift from Paytm to Jio Financials, which is now just getting ready to really spread its wings in the new digital environment.
That's the editor's take on Paytm as a counter. Meanwhile, the two startup unicorns of the ecosystem, Byju's and Paytm, they're going through a pretty rough patch right now. There are various kinds of crises that are hitting both of them. Byju's having recorded over 800 crore rupees of losses in the latest quarter. And then, of course, we've been talking about this at great length, the RBI directing Paytm to seize all deposits and credit transactions. So how did these two poster boys of the Indian startup ecosystem get to this point, and what's their journey been like? Let's put that in focus. Anurag Joshi, my colleague, has been studying this and he's joining us. He's also at the wall. Anurag, if you can put this in focus, we're talking about both Byju's and Paytm.
We are looking at the two top startups in India and the rise and fall of the startup poster boys, Byju's and Paytm. Byju's was founded in 2011 by Baiju Ravindran and his wife Divya Gokulnath, and after a great initial run, Byju's had his share of problems starting in late 2022, and through 2023 it has gone through a tumultuous time, and which has been marked by a legal tussle with the lenders to its $1.2 billion TLB loan, delayed earnings of Byju's, and also recently it has been under severe cash crunch. Byju's has also currently started a rights issue of $200 million, and this rights issue is at a 99% haircut to its peak valuation of $22 billion. If we look at Paytm, it started operations as Paytm Payments Bank in 2017, but very soon troubles caught up with the regulator RBI, and Paytm had to stop onboarding customers in 2018. This restriction was reversed in 2019, but recently, again, on Jan 31, the regulator instructed Paytm to stop all credit and deposit operations effective Feb 29. Paytm is at the risk of even losing its banking license and is currently trying to find ways to transfer its customer base, which is huge into millions, to other fintech providers.
Tumultuous times indeed, both for Paytm, and of course, we are looking at Byju's very closely.